Good morning, students. Welcome you all once again in the revisionary classes organized by Board of Studies of ICAI. Students, today topic is very important, right? If I talk about impairment, there are two kinds of impairment. Impairment of financial assets and impairment of non-financial assets. So impairment of financial assets is covered under Ind AS 109, which is the standard on the financial instruments. Impairment on non-financial assets, which is property, plant and equipment, investment property, intangible assets. So on these items, impairment is covered under Ind AS 36, right? So we are going to talk about Ind AS 36 impairment of assets, which is largely on the property, plant and equipment, which is on investment property, intangible assets, right? So friends, what is meant by impairment and how it is technically different from depreciation, right? So this is a revisionary class. I will set the context. I'll discuss the standard for next 10 to 15 minutes. And then I jump to the comprehensive questions on impairment. With the help of the questions, I will discuss the concepts again, okay? So friends, what is the difference between depreciation and impairment, right? So depreciation is a systematic charge. For example, you bought a car and the life of the car is 10 years. Let's say it's a diesel car. The life of the diesel car is 10 years, okay? And you bought the car at 10 lakh rupees. So what is the per annum depreciation? What is per annum depreciation? Can you please write on the chat box? What is per annum depreciation? Yes, per annum depreciation is 1 lakh rupees. 10 lakh divided by 10, 1 lakh rupees, the per annum depreciation. Okay. But let's say the car met with an accident. Okay. So after the end of 2 years, the car met with an accident. Okay. And WDV of the car at that point of time was 8 lakh rupees. Since car met with an accident, so the value of the car will go down or not, even though the owner will repair the car, but accidental car value will go down or not. Let's say if you are the buyer, would you like to buy a car which had met with the accident? Tell me.
No, probably no.
Answer is no. Yes. And I would prefer this yes, no, or small answer, objective type answer. Please write on the chat box. Okay. So when the car met with an accident, the value of the car has gone down significantly, right? So when it goes down significantly, is it a depreciation? It is a accelerated depreciation kind of a thing, which is kind of an impairment. Second example. Let me take second example. So there was a diesel car of rupees 10 lakh. After 3 years, what was the WDV of the diesel car? After 3 years, life of the car was 10 years. 7 lakh rupee. 7 lakh rupee is the WDV of that car. Okay. Now, so when you park your car in the night, the morning you got an announcement, right? So the government came with a notification that diesel car will be banned in Delhi. So this car was located in Delhi. So government has announced that diesel car, due to the increasing pollution, diesel car will be banned in Delhi in the next 6 months. Friends, the WDV of the car was 7 lakh rupee. Now when you go to the market, don't you think the value of the car has significantly gone down due to this negative announcement by the government? Yes. Yes. But whether efficiency of the car has gone down, the way you parked the car yesterday night, the car was same. Run this car on the roads of Bihar, Karnataka, UP, wherever, this car will run fine. But why the value of the car has gone down? Because of this negative announcement by the government. What does it mean? It means there is a one-time charge. There is a one-off event, right? Due to this one-off event, the value of the car has gone down. So friends, this is known as an impairment. So depreciation is a systematic charge. Impairment is kind of a one-off. Depreciation is a consumption-based charge. And impairment is event-based. Depreciation is consumption based. Means when you consume the asset, when you consume the future economic benefit, you are depreciating the asset. Impairment is event based. Depreciation is a regular expense, constant charge, and impairment is like a one-time hit, right? So have you understood the difference between depreciation and impairment? And this depreciation and impairment are the separate line item in the P&L as per Ind AS 1, presentation of financial statements. Okay. If I talk about the agenda, friends, objective, scope, and meaning of impairment loss, theoretical part, identification of an asset that may be impaired. We'll discuss quickly that how to identify an asset which can be impaired, right? Measurement of recoverable amount, recognition and measurement of impairment loss, concept of cash generating unit and goodwill and corporate assets, allocation and reversal of impairment loss, and disclosures. These are the complete agenda for Ind AS 36, impairment of assets, right? So technically speaking, we are going to discuss what is meant by impairment loss. Impairment loss is what? When your carrying value in the books of accounts, when your carrying value in the balance sheet is more than your recoverable value, it means there is a need for impairment charge. There is a need for impairment loss. When your carrying value is higher than recoverable value, it means there is a impairment charge. There is a impairment loss. Okay. Friends, my dear friends, so impairment loss, it means what is meant by impairment loss is equal to carrying value minus recoverable value. For example, the carrying value for machinery in the balance sheet is 1 lakh rupee, but the recoverable value is 80,000. So what is the impairment loss? What is the impairment loss? Impairment loss is 20,000, right? Carrying value minus recoverable value, right, Praveen? It's 20,000. Friends, what is meant by recoverable value? Recoverable value is higher of what? Higher of fair value less cost to sell or value in use. Higher of fair value less cost to sell or value in use. Okay. Friends, recoverable value means the value which you can recover, right? And how can you recover the value of an asset? Tell me. How can you recover the value of an asset? You can recover the value of an asset by selling the asset, number one, or by using the asset. I have a mobile phone. Okay. I have purchased this mobile phone at 50,000 rupees. I have purchased this mobile phone at 50,000 rupees. Okay. So how can I recover the value of this mobile phone? By consuming the benefits, means by using this mobile phone over the life of this mobile phone. Correct. For example, I'm using this mobile phone since last 3-4 years. Okay. So I have used this mobile phone. I have enjoyed the benefits provided by this mobile phone. What is the second way by which I can recover the value of this mobile phone? So first one was by using the mobile phone. Second one is by selling the mobile phone. Okay. So these are the two ways by which you can recover the value of the asset, which is known as the recoverable value, and recoverable value is higher of fair value less cost to sell or value in use. Fair value less cost to sell is a value which can be derived by selling an asset, Okay. Fair value less cost to sell. And value in use is a value which can be derived by using the asset. Okay. Fair value less cost to sell or value in use, right? So friends, this is the meaning of an impairment loss. Okay. Now the question comes, and objective is just a theoretical part, that this standard, why this standard was issued? This standard was issued to ensure that no asset will be carried in the books at more than the recoverable value. And this standard talks about how to determine the recoverable value, how to allocate the impairment loss, how to reverse the impairment loss, and the disclosure part. This standard is applicable to all kind of non-financial assets except specific assets on which the impairment provision is given in the standard. For example, inventory. In inventory, it talks about inventory has to be valued at cost or NRV, whichever is lower. So the impairment of inventory itself is covered under Ind AS 2, and hence Ind AS 36 is not applicable to inventory. Okay. So these are some examples on which the specific standard cover the provision of impairment in for those item only, and hence for other item typically PP, intangible asset and investment property, Ind AS 36 is applicable typically. Okay. Yes, so what is impairment loss? We discussed impairment loss is the amount by which the carrying value of the asset is higher than the recoverable value. Friends, in this entire standard, you will hear two words. One, carrying amount. Second, one, individual asset. Second, cash generating unit. Okay. So this standard talks about the impairment of an individual asset and a group of asset. What is meant by group of asset? Group of asset means cash generating unit. Okay. For example, this mobile phone. This mobile phone is an individual asset. So we will be talking about the impairment loss on individual asset. Let's say I have purchased an office. Okay. And when I purchased an office, I got a lot of furniture in the office, right? And the mobile phone was there in the office. So a lot of assets was there in the office. Okay. So what is that office? The office is more like a group of assets. Okay. The office is more like a group of assets and it is like a cash generating unit. Okay. So friends, we will be talking about the impairment on individual asset and impairment on cash generating unit. Okay. The basic fundamental is same. When the carrying value of an individual asset or carrying value of a cash generating unit is higher than the recoverable value, then it will be called as an impairment loss. Okay. Yes. So what is recoverable value? It is higher of fair value less cost to sell and value in use. The carrying value of a building in the books of ABC Limited as on 31st March 2016 is 250 lakhs. The value in use as on that date is 200 lakhs and fair value less cost to disposal is 188 lakhs. What is the recoverable value in this case? What is the recoverable value? Carrying value is 250. Value in use is 200. Fair value less cost to disposal is 188. What is the recoverable value?
200 lakhs.
200 lakhs is the recoverable value. Okay. 200 lakhs is a recoverable value. So what is the impairment loss in this case?
50
50
lakhs.
lakhs is the impairment loss in this case. Carrying value minus recoverable value. Carrying value minus recoverable value is your impairment loss. Okay. Right. So how to identify an asset that may be impaired? Friends, impairment assessment is not a simple exercise. It requires a lot of calculations. It requires a lot of valuations. I'm talking about the practical life. The standard which are applicable to your course and the standard which is applicable in your examination, it is equally applicable in the practical life also. When this COVID came, a lot of companies have assessed for the impairment. Typically, the tour and travel industry, hotel industry, the entire business was stopped. The airline industry, no flight was flying. Okay. So all these companies operating in this tour and travel industry, they have gone through with a detailed impairment assessment, right? So friends, it is important to identify which asset may be impaired. For example, I'm using this mobile phone since last 3 years. And what standard says the objective of Ind AS 36 is to ensure that no asset in the balance sheet should exceed the recoverable value on the reporting date. What does it mean? It means every year on the reporting date, I need to do the impairment assessment, right? इसका यही मतलब हुआ ना? Yes or no? Yes? Yeah? So it means at the reporting date, every year at the reporting date, we should do the impairment assessment. Friends, don't think about the question in the exam. Just think about a big company in the market, a big company in India, Reliance Industries, let's say. They have a property, plant and equipment, investment property, intangible asset, for example, is worth 5 lakh crore. and they have multiple assets located in multi-geography across India and outside India. Tell me, whether doing the impairment assessment, I mean to say, identify the recoverable value, getting the fair value done for all the assets, and computing the value in use, is it a simple task? Is it a simple task? I'm just asking yes or no. Praveen is saying no, sir. What about others? Salesh, Prashant,
No,
Yash?
sir.
No.
It's a complex task.
It's a complex exercise. It's a time consuming exercise. It's a cost consuming exercise. And at times, if any negative event is not there, generally impairment is not coming every year. Okay, because some part of bit is covered by the depreciation also, because life is, let's say, 5 year, so you're already consuming the asset and depreciating the asset, so WDV is always decreasing. Yes or no? Yes, by depreciation, your WDV, your carrying amount is always decreasing when you use the asset, correct? So friends, that is why, just to break that, because the standard starts with to ensure that no asset will be carried at more than the recoverable value. So in standard, it has given a guideline that you need to identify which asset may be impaired. You need to identify. And how to identify? Standard says that an entity shall assess at the end of each reporting period whether there is any indication that an asset may be impaired. If indication exists, then you are only required to estimate recoverable value. If an indication exists, then only you have to go through with the detailed impairment assessment. For example, I have purchased this mobile phone. Again, I am showing this mobile phone to you guys. I purchased this mobile phone, and when it comes to 31st March 25, my mobile phone was running fit and fine, right? So do I need to estimate the recoverable amount? Do I need to do the impairment testing of this mobile phone?
No, sir.
No.
I mean, we shall do it because impairment testing has to be there. Estimation has to be made, but there is no event.
Yes, there is no indication that I should go for the impairment assessment. When I'm saying impairment assessment means assessment of recoverable value. Okay. So I'm giving second example. So I purchased this mobile phone a year back. When I come to the reporting date, so my mobile phone is giving a lot of problem. At times it got hanged. At times, the mobile phone, I'm facing a problem in charging the battery. So a lot of problem has started in the last couple of days. So in this scenario, whether I should go for detailed impairment assessment, whether I should estimate the recoverable value, what do you say? What do you say?
The conditions exist.
Yes. So the indication exists, right? So what is the indication exist? So these kind of events are indicating that your mobile phone is not running fine. You should do the impairment assessment. You should estimate the recoverable amount. At times, student got confused. सर ये टेम्पररी भी तो हो सकता है, सर हो सकता है कि प्रॉब्लम लिमिटेड हो, सर हो सकता है इससे वैल्यू ना गिरी हो. ओके. So what I have told you? I told that you have to do the detailed impairment assessment, means you have to estimate the recoverable amount. I haven't said that impairment will exist. I haven't said that. मैंने तो ये बोला है कि आपको एस्टिमेट करना है रिकवरेबल वैल्यू, आपको असेसमेंट करनी है इम्पेयरमेंट की. और जब आप असेसमेंट करोगे, while doing the assessment, if your fair value less cost to sell and value in use, this will become more than or equal to carrying amount, will you do the impairment? Will you book the impairment loss? Answer is no. Why? Because recoverable value is higher than the carrying value or equal to the carrying value. But if recoverable value comes to lower than the carrying value, then you have to book an impairment loss in the P&L. Carrying amount minus recoverable amount, right? Understood? Clear? Clear or clear? Clear in mind or clear from mind? Understood. Okay. Yes. So friends, there are three assets. There are three assets. Okay. On these are the exceptions. Okay. While for all other assets, you have to check the indication. If indication exists, then only you should go for the detailed impairment assessment. Otherwise, no. But there are three exceptions. What are the three exceptions? So all three exceptions are intangible assets. Friends, intangible asset with an indefinite useful life. We discussed this concept in Ind AS 38. So Ind AS 38, right? Intangible asset with an indefinite useful life. Intangible asset not yet available for use, and goodwill acquired in business combination. For these three assets, an entity cell test annually for impairment, irrespective of event exists or doesn't exist, right? So there are mandatory impairment testing is applicable for these three intangible asset. Intangible asset with an indefinite useful life, intangible asset not yet available for use, and goodwill acquired in business combination. These are the three assets which are mandatorily required to undergo through with the impairment testing process. Okay. Clear? Is that clear? Right? So friends, when we were talking about indicator, there are two kind of indicator. Like in car, there is a left indicator, right indicator. Here it is internal indicator and external indicator. Internal indicator is an indicator which is arising within the organization, within the company. External indicator is impacted by the external environment. Example of internal indicator, your asset is giving you evidence of obsolescence or physical damage. Your asset is physically damaged. Your asset is remaining idle. You are not able to utilize the asset. There is a discontinuation, disposal or restructuring plans of the company. The company wants to shut down the factory. So it is an internal indicator that you should go with the impairment testing. Declining asset performance, right? Your asset performance is declining continuously. It is your internal indicator of impairment. Okay. Significant decline in market value of the asset. It is an external indicator. Changes in technological, market, economic, or legal environment. Change in interest rate. Your interest rate has increased. Why increase in interest rate is an example of external indicator. Why increasing in interest rate is an indication of impairment. Can you please tell me? Can you please tell me why it is an example of external indicator? What is value in use? Value in use is equal to present value.
Fair value.
Present value of future
Cash flow.
future cash flows. Right? Let's say future cash flow. FCF, future cash flow is 1 lakh rupee. Future cash flow is 1 lakh rupee. Your interest rate, discount rate. So discount rate is governed by interest rate only. Discount rate is 8%. What is the present value? Let's say this is at the end of the first year. So what is the present value? What is the present value future cash flow? Value in use क्या होगा इस केस में? What is my value in use? 1 lakh divided by 1 plus 8%. Yes. So 92592 is the value in use. Same example, assuming this is again 1 lakh rupee, but instead of 8%, the interest rate is 10%. So what is my value in use? 1 plus 10%. What is the value? Is it more than, less than, equal to 8%? What is the value? It is lower than. So when your interest rate is increased, your value in use has gone down. Right? Have you understood why this is an external indicator of impairment?
Yes, sir.
Yeah? Okay.
Yes, sir.
Low market capitalization, right? The share price is declining regularly. So these are the indicator of impairment. So recoverable amount we discussed, my dear friends. So let's say you are doing the impairment testing, okay? And you have computed value in use, that for how much period you will use the asset, life of the asset. And you have also estimated the future cash flows, okay? So after estimating the future cash flow and discounting it, you got the value in use. And this value in use comes out at, let's say, 5 lakh rupees. And the value carrying amount of the asset is 4 lakh rupee. Carrying amount is 4 lakh rupee. And value in use is how much value in use? 5 lakh rupee. Just allow me a second. So value in use is 5 lakh rupee. Carrying amount is 4 lakh rupee. So whether impairment will be required? In this case, whether impairment will be there?
No, sir.
Because your value in use is higher than the carrying value, right? And in this case, do I need to compute fair value less cost to sell? Since my value in use is already higher than the carrying amount, do I need to get the fair valuation done?
Not required.
Why?
Because
Because
value in is already more than the carrying amount.
And the formula of the recoverable value is not lower of fair value less cost to sell in value in use. It is higher. It is higher, right? So it doesn't matter. If the fair value less cost to sell comes out at, let's say, 50,000 rupees, still you will take value in use. Correct? And your value in use is already higher than the carrying amount. Correct? Right? Is that clear? Clear, hai na? So when you are doing the impairment assessment, when you are estimating the recoverable value, if one value, let's say you have got the fair valuation done, and if the fair value is higher than the carrying amount, you are not required to compute value in use. Vice versa. If your value in use is already higher than the carrying amount, you are not required to compute fair value less cost to sell. Okay? Because the formula is recoverable value is higher of fair value less cost to sell and value in use. Okay? Friends, fair value is a market value. It's a price which will be received by selling an asset. Okay. Less cost to sell means the cost of disposal is an incremental cost, directly attributable cost. Had this asset not been sold out, then the cost would not have been incurred. आपको ध्यान है ना directly attributable का मतलब? I discussed this meaning of directly attributable in Ind AS 23 borrowing cost, 38 intangible asset, and Ind AS 16 property, plant and equipment also. Directly attributable means had that asset not been there, had this expense not been incurred. Likewise, had this asset not been sold out, this cost not been incurred, right? So fair value less cost to sell. Cost to sell example, legal cost, stamp duty, similar transaction taxes, cost of removing the asset, directly incremental cost to bring an asset into a condition for sale. Okay. Let's discuss this example quickly because in the comprehensive question, this is one of the part which I'll going to discuss. ABC Limited owns a bottling plant located in one of its factory. The professional valuers have estimated that the current market value of plant is rupees 10 lakh. The valuation fee was rupees 1 lakh. ABC needs to dismantle the plant and deliver it to the buyer. Dismantling cost is rupees 2 lakh. Specialized packaging cost would be 1 lakh and legal fee would be 0.5 lakh. Determine its fair value less cost to sell. Cost to sell is a directly attributable cost which is required only when the asset will be sold out. Friends, tell me, what is the fair value less cost to sell? Important question. A small question, important question. Tell me, what is the meaning of fair value less cost to sell? I want everyone to solve this question on the pen and paper. I'm giving you a minute.
So it will be 6.5 lakh.
It is 6.5 lakh. Okay.
Yes, sir.
So how have you computed 6.5 lakh? The fair value is 10 lakh rupee, right?
Yes, sir.
Okay,
From
then.
fair value, I have deducted dismantling cost and packaging expenses, legal fees.
So why have you not deducted valuation fee of rupees 1 lakh?
Sir, because it is not directly attributable, it is not necessary to pay that much fees, no? And because of that reason.
So let's say I want to sell my building, okay? And I want to know the fair value. I want to know the market value. And for knowing the market value, I have engaged a valuer and got the valuation done for my building, right? So once I got the valuation, then only I will decide whether I will sell or I will not sell. So whether this valuation fees are directly attributable cost of selling the asset, answer is no. It's a sunk cost. This is a cost which is required for decision making, right? This valuation fee is not a directly attributable cost, incremental cost for selling the asset, right? But when you sell the asset, you will dismantle the plant, right? When you sell the asset, you will do the specialized packaging. You will pay the legal fees. So these are the directly attributable costs. This valuation fee is not the directly attributable cost. It is not a cost to sell. And hence, as you rightly mentioned, it's 6.5 lakh. Valuation fee is not a cost to sell. Valuation fee is a cost to decide, not a cost to sell. Okay. But dismantling, packaging, legal fee, this is a cost to sell. This cost will incur when you will take a decision to sell the asset. After taking a decision to sell the asset, when you are selling the asset, these costs will have incurred. Is that clear? Is that clear? What is a value in use? So value in use is a present value of future cash flows expected to be derived from an asset or cash generating unit. Whether future cash flow means only outflow or inflow also, or only inflow or outflow also. What is the meaning of future cash flows? It is a combination of both. It's a both inflow as well as outflow. So friends, two important aspects are there in value in use: how to estimate the future cash flow and which discount rate is required to be used. Okay. So the standard says that you have to estimate the future cash flows which the entity expects to derive from the asset by using the asset. Okay. And you need to also consider the expected variations in the cash flows. Okay. You need to also apply the time value of money concept. For example, the cash flow which will arise after 2 years, you have to apply the discount rate and discount it for 2 years. Okay. You have to also consider other factors while determining the value in use, while estimating the cash flows. Okay. You have to use the management approved budgets, right, to see what will be my value in use. Because how to compute value in use? First, you will estimate the future cash flows. The future can be estimated, but it has to be supported through a what? It has to be supported through underlying documents. Okay. Right. And most recent financial budget or forecast has to be used. Okay. And the projections, the future cash flow should be covering 5 years, not more than 5 years. But if more than 5 year can be justified, it can be taken for more than 5 year also. For example, for an aircraft, in an aviation industry, the life of the aircraft is 20 years and the cost of the aircraft is much higher. So do you think that the 5-year cash flows are sufficient to provide you the recoverable value of the aircraft? The life is 20 years. So if the company is buying an aircraft, the company has a vision for 20 years, not 5 years. If we will compute the profitability from one aircraft versus the cost of the aircraft, probably it will not even a break even in 5 years. Right? It will not even a break even for 5 years. So friends, in that case, like solar plant, aviation industries, so the projection should cover more than 5 years if it is justified. Okay. What are the cash flows which are required? Cash flow should be estimated for asset in their current condition. Okay. What does it mean? Let's say the company has a fleet of 100 cars. And the company is estimating that after 5 years, a technology will come, the company will invest in the technology, and all these 100 cars become driverless cars. So the company will be able to save the cost of the driver. And the company will invest in the technology to upgrade these cars into a driverless cars. Do you think that investment, I mean to say cash outflow, which will happen after 3 years, and cash inflow, I mean to say cost savings by salary of driver, this cost savings, whether those two items has to be taken in the estimation for computing the value in use, whether these cash flows has to be taken in the value in use computation? Answer is no. Why? Because you're Praveen, it is no. You know why? Because the cash flow, while doing an impairment assessment, for example, today on 31st March 25, you are doing an impairment assessment of a machinery, of a plant. So you have to estimate the cash flow for computing the value in use. You have to estimate the cash flow for the asset in the current condition. Currently, the car is not driverless car. Currently, the car is driver. The car is run through driver. Okay. It is not a driverless car. And hence, my dear friends, and hence, this investment in the driverless technology and the cost savings by salary of driver, these cash flows should not be considered right now for estimating the future cash flows. Cash inflow from the continuing use of the asset. Okay. When you are using the asset, you are getting cash inflow. So cash inflow has to be estimated, and cash outflow. For using the asset, you will have some cash outflow also. That is also need to be considered. And net cash flow, if any, to be received or paid for the disposal of the asset at the end of the useful life. Okay. Yes. So friends, cash flow does not include future restructuring to which an entity is not yet committed. What does it mean? So entity wants to incur some restructuring cost. Okay. And the entity is not yet committed. If the entity would have been committed, the entity would have taken a provision in the books of accounts. Yes or no? You remember the concept of restructuring? It is given in Ind AS 37, provisions, contingent liability and contingent assets. Right. So if the company is committed for restructuring, means it is approved in the board meeting, it is communicated to the relevant stakeholder, then it means it is committed. Right. And when it is committed, provision has to be taken in the books of accounts. So let's say the company has already taken a provision. The cash outflow will happen. The cash outflow will happen in future. Let's say the company has announced the restructuring. Right. The company is shutting down one of its operation in the next 6 months. And company has already announced and communicated to the workers, employees, etc., etc. And the company has announced that all the employees who will be suffered from this restructuring, they will be compensated with 6 months of salary. So the company will take a provision in the current year when the company has announced this decision, but the cash outflow will happen in the next year, right? So the provision has to be taken in the current year, while the actual cash outflow will happen in the next year, right? So again, it's an impact of restructuring. So whether this restructuring outflow has to be considered while estimating the cash flow for value in use? Yes or no? Yes, it has to be considered. Why? Because since the company has already created a provision for restructuring, right? It means the company is committed. But if the company is not committed, only thinking about restructuring, so whether that will be considered, answer is no. Improving or enhancing the asset performance. The company wants to invest in the technology in future, like driverless car. So that is not required to include. Cash inflow or outflow from financing activity, income tax receipt or payment. These are not the relevant cash flow for determining value in use. Okay. Discount rate. What is a discount rate? Discount rate is your weighted average cost of capital. If it is not there, then you need to take incremental borrowing rate. If it is not there, then you need to take other market borrowing rates. Okay. So friends, this was the question which we have discussed, talking about the cash generating unit. What is the cash generating unit? Cash generating unit is an identifiable, smallest group of asset, which can be identifiable, smallest group of asset, which can generate independent cash flow, right? That is the meaning of cash generating unit. Friends, whenever there is a cash generating unit, okay, you need to estimate the recoverable value of cash generating unit, and you need to allocate the impairment loss into the multiple asset in the proportion of their carrying value. But you need to just remember two things. If there is a goodwill in the cash generating unit, that goodwill has to be strike off completely in the first place, right? So if there is an impairment loss in the cash generating unit, the first hit has to be given to the goodwill. Then if the balance impairment loss is there, it has to be allocated pro rata in the proportion of the carrying value of the asset, right? Friends, in the cash generating unit, there could be other assets also. Cash generating unit is like a factory. So in the factory, only machines are not there. Raw material is also there. Finished goods is also there. And this raw material, finished goods are inventory. It is covered by Ind AS 2 inventory standard, right? So in Ind AS 2, it already talks about inventory has to be measured at cost or NRV, whichever is lower. So if there is an asset in the cash generating unit, which itself, as per the relevant standard, which is already at the recoverable value, you are not required to allocate the impairment loss further on that assets. Okay. Or in the cash generating unit, there is a machinery which can independently generate cash flow. But that machinery has other assets also, other machinery also. So all these machine put together has become a cash generating unit. But this machine can also generate cash flow independently. In that case, whatever is the recoverable value of that machinery, you cannot allocate impairment loss more than the individual impairment loss on that machinery, right? So we will discuss these all concepts with the help of one comprehensive question which is given by ICAI Board of Studies. I hope this Word file is visible to everyone. Is it visible to everyone, friends?
Yes, sir, visible.
Let's discuss this question. Question number 1. Alia Limited is a manufacturing company. It's a detailed, comprehensive question. Very good question. If this question will come in exam, probably it would be, 10 to 12 marks question. Alia Limited is a manufacturing company which deals into manufacturing of cold drinks and beverages. It is having various plants across India. There is machinery A in the Baroda plant, which is used for the purpose of bottling. Machine A in the Baroda plant, which is used for the purpose of bottling. there is one more machinery, which is machinery B, clubbed with machinery A. There are two machinery A and B. Machinery A is in the Baroda plant used for the purpose of bottling. Machine B is clubbed with machine A. Machine A can individually have an output and also sold independently in the open market. So machine A, you can estimate the recoverable value for machine A. Okay. But machine B cannot be sold in isolation. But you cannot sell machine B independently. So can you estimate the fair value less cost to sell for machine B?
No.
Can you estimate the fair value less cost to sell for machine A?
Yes.
Yes, you can estimate, right? So this machine B, fair value less cost to sell cannot be estimated. And hence, this machine B has to be clubbed with machine A, and this is forming a cash generating unit. And this machine B alone cannot, and without clubbing with machine A, it cannot produce output as well. So this machine B is fully dependent in terms of value in use, in terms of fair value less cost to sell also. Friends, the company consider this group of assets as a cash generating unit, and an inventory amounting to rupees 2 lakh and goodwill amounting to 1.5 lakh is also included in this CGU. So in this cash generating unit, how many assets are there? Please tell me.
Four.
Four assets: machine A, machine B, inventory, and goodwill. These are the four assets which are there in this cash generating unit. Two property, plant and equipment, one intangible asset, and one inventory, right? So this first paragraph has given an information that there is a cash generating unit. There are four assets in the cash generating unit. Machine A, you can estimate the recoverable value independently for machine A, but for machine B, it cannot be estimated. And hence this machine B becomes part of this cash generating unit. Okay. Now in the second paragraph, some informations are given. In the second paragraph, some informations are given. What are the information which is given in the second paragraph? Machine A was purchased on 1st April 20x3 for rupees 10 lakh and residual value is 50,000. So it means on 1st April 20x3, the outflow was 10 lakh rupee. And this residual value is 50,000. What does it mean? What does it mean?
Recoverable amount.
Residual value, scrap value. It means when the life of the asset will complete, the company will be able to recover the scrap value at the end of the life is 50,000, right? And this residual value is also required for computing depreciation, right? Cost minus residual value divided by useful life is equal to depreciation. So 10 lakh is the cost of the machine A, 50,000 is the residual value. Machine B was purchased on 1st April 20x5 for rupees 5 lakh with no residual value. The useful life of both machine A and machine B is 10 years. What is the per annum depreciation for machine A and machine B? What is the yearly depreciation for machine A and machine B?
1,45,000.
1 lakh
45,000. 95,000 and 50,000.
95,000 and 50,000. Very good. So 95,000 and 50,000. Okay. 10 lakh minus 50,000 divided by 10, 95,000. And 5 lakh divided by 10, 50,000. Total depreciation is 1,45,000. 95 for machine A, 50,000 is for machine B. The company expects following cash flow in the next 5 years pertaining to machine A.
So what question I have?
Sorry?
Like machinery B was purchased on April 2005. So without B, A cannot produce for 2 years.
Yeah. So without B, A cannot produce. It is not in the question. Without A, B cannot produce is in the question. See, in the question, it is very clearly written. Machine A can individually have an output and also sold independently in the open market. Machine B cannot sold in the open market, and without clubbing with machine A, it cannot produce output as well. Right? Clear hai na?
Yes, sir.
So the company expect following cash flow in the next 5 years pertaining to machine A. For machine A, cash flows are given. The incremental borrowing rate of the company is 10%. The incremental borrowing rate of the company is 10%. Discount rate is given. Cash flows are given. Right? Now read the question further. What is there? Cash flow for machine A is given. First year cash flow 1.5 lakh, 1 lakh, 1 lakh, 1.5 lakh, right? And this 1 lakh cash flow is there excluding residual value. Excluding residual value, 1 lakh cash flow is also there. Okay. On 31st March 20x8, on 31st March 20x8, this machine was purchased on 1st April 2003 and it is talking about 31st March 2008, means after 5 years. The professional valuer estimate that the current value of machine A is 7 lakh. What this information is talking about? Fair value. Fair value. Okay. Valuation fee was rupees 1 lakh. There is a need to dismantle the machine before delivering it to the buyer. Dismantling cost is 1.5 lakh. Specialized packaging cost is 25,000. Legal fee is 75,000. This paragraph is an independent question in the Board of Studies material. Study material. And now this paragraph is become part of this comprehensive question. What is the fair value less cost to sell? What is fair value less cost to sell?
4,50,000.
4 lakh? 7 lakh?
50,000.
7 lakh minus 1.5 and 25 and 75. So 7 minus 2.5 lakh, which is comes out at 4.5 lakh. Okay, 4.5 lakh. The inventory has been valued in accordance with Ind AS 2. Right? The recoverable value of cash generating unit. The recoverable value of cash generating unit is rupees 10 lakh on 31st March 2008. So the recoverable value of cash generating unit is given on 31st March 2008. And what were the assets in the cash generating unit? Machine A, machine B, inventory and goodwill. Okay. Goodwill. Okay. In the next year, the company has done the assessment of recoverability of the CGU and found that the value of the CGU is 11 lakh. So this question has given you the recoverable value of CGU, which is 10 lakh. And this question has also given you in the next year, the value of the CGU is 11 lakh on 31st March 2009. What is the relevance of this two lines? Recoverable value of CGU on 31st March 2008 and recoverable value of the CGU on 31st March 2009. And 2009 value is 1 lakh more than the 2008 value. What is the relevance of this line?
Revaluation.
So reversal of impairment loss on CGU. From 10 lakh, it become 11 lakh. It means the value has gone up. So if you have done any impairment loss, if you have charged any impairment loss on the CGU, you need to see the reversal of impairment loss also, right? So this question is testing so far. This question is testing the concept when the individual asset recoverable value is also estimated and it also becomes part of the CGU. Number two, this question is testing you the calculation of fair value less cost to sell. This question is also testing you how to allocate the impairment loss on cash generating unit. This question is also testing you how to reverse the impairment loss on cash generating unit up to this level, right? Then the question is giving you the recoverable value of machine A is 4.5 lakh and machine B is 7.6 lakh on 31st March 2009. And at the time of reversal of impairment loss, this question has given you the recoverable value, not for 31st March 2008, you have to compute, but for 31st March 2009, this question has given you the recoverable value, given you, okay? All right. Now let's read the question further. Required. Compute the impairment loss on CGU and carrying value of each asset after charging impairment loss for the year ending 31st March 2008 by providing all the relevant working notes to arrive at such calculation. Compute the prospective depreciation for the year 8-9 on the above assets. Compute the carrying value of CGU as at 31st March 2009. So this question is asked everything. So friends, now you need to tell me how should I proceed ahead with this question. Tell me, how should I proceed ahead? कैसे जाऊं मैं आगे? How do I compute?
Sir, all the relevant information about machine A is given. So let us first compute the impairment loss of machine A. After computing the impairment loss of machine A, the impairment loss of the value of entire CGU is given, recoverable value, that is 10 lakh. So let us put that value of 10 lakh. Then on inventory, we cannot charge impairment because it is covered under Ind AS 2. गुडविल में से गुडविल को पहले डिडक्ट कर देंगे इम्पेयरमेंट लॉस से, फिर उसके बाद ए का हम लोग कंप्यूट कर चुके होंगे, रिमेनिंग वी विल एलोकेट टू मशीन बी.
Yes. So let's go one by one. Should I solve this question in Excel file or should I explain through Word file only? Tell me. What should I do?
Excel file.
Sorry?
Excel file, sir.
Okay, Excel file. So let me take you through the Excel file. Okay. Question number 1. I hope my Excel file is visible. So as rightly mentioned, let's go step by step. And the first step, let's compute the recoverable amount and impairment loss on machine A because it can be independently estimated. Machine A, correct? And the cash flow of machine A is given. Fair value less cost to sell of machine A, we need to compute, and you guys have computed 4.5 lakh. Okay. The carrying amount of machine A is also given. So whether the carrying amount of machine A is given, the cost is given, the depreciation is the cost is given, residual value is given, you can compute the depreciation, right? Yes. So first of all, we will start with the carrying value of machine A and machine B before impairment, right? Because impairment is the comparison between the recoverable value and the carrying value, right? Machine A and machine B. Shall I go with the machine A and machine B? Shall I compute the carrying amount? Yeah? Yes. Carrying amount of machine A and B. Working note 1. Machine A, machine B. First of all, cost the machine. What is my cost of machine? Machine A की cost कितनी थी? 10 lakh. 1, 2, 3, 4, 5. Machine B की cost कितनी थी?
5 lakhs.
5 lakh. What is the useful life of both the machine?
10 years.
What is the residual value? For machine A, 50,000. For machine B, 0.
0.
So we need to compute the carrying amount of machine A and B as on 31st March 20x8. And when this machine was purchased, purchase date. When this machine was purchased? 1st April 2003. And this is on 1st April 2005. राइट ये इंफॉर्मेशन है ना, और तो कुछ नहीं है. दिस इज द इंफॉर्मेशन विच इज देयर. सो व्हाट इज माय ईयरली डेप्रिसिएशन? क्या होगा ईयरली डेप्रिसिएशन? कॉस्ट माइनस रेसिडुअल वैल्यू डिवाइड बाय यूजफुल लाइफ. ओके, divide by useful life. Any doubt, any challenge up to this part? Any challenge up to this part? No?
No, sir.
What is the carrying amount? What is the carrying amount now? What is the carrying amount? The cost was 10 lakh minus carrying amount is cost minus accumulated depreciation minus accumulated impairment losses. Impairment loss तो कैलकुलेट करना है अभी. Accumulated depreciation कितना है? कितना है? 95 मल्टीप्लाई बाय 5 ना. सो कितने साल खत्म हो चुके हैं? टाइम elapsed in years. कितने साल खत्म हो चुके हैं in years?
5 years.
इधर
5 years.
मशीन बी भी 5 year.
3
31st
years.
3 years. 3 years. So cost minus yearly depreciation multiply by जितने साल खत्म हो चुके हैं. Okay. 3,50,000 and 5,25,000. This is the carrying amount. Are you okay with this carrying amount? Any doubt, any challenge in this carrying amount? Are you okay with this? Yes or no?
Yes, sir.
So 2 नंबर आपके आ गए हैं. ठीक है. This is the carrying amount of machine A and machine B. Now, shall I compute? The cash flow of machine A is given. Shall I compute the value in use of machine A? Discount rate is also given, which is 10%. कंप्यूट करूं मशीन ए का वैल्यू इन यूज और मशीन ए का फेयर वैल्यू लेस कॉस्ट टू सेल, वो भी कंप्यूट करूं?
Yes, sir.
No.
मशीन बी का फेयर वैल्यू लेस कॉस्ट टू सेल कंप्यूट हो पाएगा? विल आई बी एबल टू कंप्यूट द फेयर वैल्यू लेस कॉस्ट ऑफ मशीन बी?
No, sir.
व्हाई नो?
Because it cannot be sold without as a
Yes,
means
because
second party.
independently it cannot be sold in the open market, and it cannot produce output also without help of machine A, right? So working note 2, fair value less cost to sell. Machine A. What was the fair value? What was the fair value of machine A? Fair value क्या थी क्वेश्चन में? The fair value was 7 lakh. Remember? As at 31st March 7 lakh. Less cost to sell. What is my cost to sell? Valuation fee. Whether valuation fee will be my cost to sell?
No, sir.
No, sir.
No. not to be taken. Okay. Then after valuation fee, what is there? और कौन सी cost?
Dismantling cost of 1,50,000.
Dismantling cost of 1,50,000.
Specialized packing for 25,000.
Specialized packaging cost and specialized packaging of 25,000. And then legal fees, right? Legal fee is also there, na?
Yes, sir.
How much? 75,000. So what is my total cost?
$250.
$250, right? So what is my fair value less cost to sell?
4.5.
Four lakh 50,000. Now, what is the third working? What should I compute now? I got the carrying value of both the machineries, machine A and B, and I have computed the fair value less cost to sell of machine A. Now, what should I compute?
Impairment loss on machine A.
मैं पहले वैल्यू इन यूज तो निकाल लूं मशीन ए का.
Yes, sir.
We need to estimate, we need to compute the value in use also, na? So value in use of machine, value in use, right? Value in use of machine A. B का निकल पाएगा value in use?
No, sir.
No, sir.
No, sir.
Because it is not generating independent cash flow. Value in use of machine A. So yearly cash flow is given. So yearly cash flows are given, right? This machine was purchased on 1st April 2003. We have computed the carrying amount as on 31st March 2008. And as on 31st March 2008, for the next 5 years, the cash flows are given. And you are doing the impairment testing on 31st March 2008, right? So you have to compute, you have computed fair value less cost to sell. Now you are computing value in use. It means for the remaining 5 year, what are the cash flows? You need to estimate the cash flow which is given in the question. Now you need to discount those cash flow. Okay. So what is my year 1, 2, 3, 4, 5? What is my cash flows? If you have the question, can you tell me the cash flows? आपके पास question है या मैं
1.5 lakhs
देखूं?
for first year.
Sorry.
1.5 lakh for first year.
1.5 lakh for first year and 1 lakh for next 2 years, right?
Yes.
3,000, 1 lakh, 1 lakh. And
1.5 again.
1.5 again, right? $1.5 again, then 1 lakh, right?
Yes.
Do I need to mention any other cash flow? These are the 5 cash flows which are given in the question.
Sir, residual value?
Yes. So when you are solving this question, and I'm taking you to the question again, at the end of the 5 year, it is giving you cash flow of 1 lakh rupee. And it is also mentioned that excluding residual value, it is not including residual value. And when this machine was purchased on 1st April 20x3, the residual value was assumed to be 50,000, right? It means this 50,000 cash flow will also happen at the end of 10th year, which is after 5 years from 31st March 2008. Correct? So I need to estimate this cash flow of 50,000 also. सही है ना? ये भी year 5 पे होगा 50,000. What is my present value factor? What is my present value factor? मेरा PVF क्या होगा? Discount rate क्या है?
10%.
At the rate of 10%. What is the discount rate for the first year? 1 divided by 1.1. Then again divide 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 by 1.1. Is that right?
No, sir.
No. Why?
Because this is in 5th year only. So 0.6.
Yes. So this 50,000 is at the same time at the end of 5th year. And this is the mistake where the students are making a mistake. This is the, these are the calculation. They have done this question on study material or some RTP, but they forgot that the discount rate used was the same, right? Which is 0.621. They are just, pressing their calculator 1 divided by 1.1, 1.1, 1.1, 1.1, 1.1, and they forgot that these are the 5-year cash flow, not the 6-year cash flow, right? Okay. So just be careful. Be careful. Okay. So what is my present value? What is my present value now? What is my present value? This is my present value. Present value means value in use. My value in use, VIU, is 489730. VIU is 489730. Are you okay with these calculations?
Yes, sir.
Okay with this calculation? Yes? Any challenge up to this level? Any challenge up to this level?
No, sir, no.
Okay. So in the question, you
One
may
question
found
I
that they have rounded off. So they have rounded off the cash flow. If you can see the question, they have rounded the cash flow in the nearest, 50 or 100, right? But I have done the actual working. Not to worry, you will get the full marks if you do the actual working, right?
Sir, one question I have.
Yeah.
Residual value is 50,000 for machine A after 10 years. Means useful life of machine is 10 years. But right now we are calculating cash flow till 5th year only.
So when the machine was acquired?
2003, 1st April 2003.
1st April 2003. So I'm again taking you to the question.
Yes.
And the question and the confusion which you are having, majority of the students, if they don't read the question carefully, they have the same confusion. And good that you have asked. Okay. Read this question again. Machine A was purchased on 1st April 2003. Right? 1st April 2003. And useful life of machine A and B is 10 years. Company expects following cash flows in the next 5 years to machine A. Incremental borrowing rate of the company is 10%. On 31st March 2008, the fair value less cost to sell is given. What does it mean? आपका जो कैश फ्लो है वो पास्ट के होते हैं या फ्यूचर के होते हैं जब आप इंपेयरमेंट टेस्टिंग करते हो तो?
फ्यूचर के.
फ्यूचर. Present value of future cash flows. You need to estimate. Past you cannot estimate. Past to actual है ना. If I'll ask you,
Yes, sir.
what will you eat today? What you have eaten yesterday? It is certain. You will tell me, sir, yesterday I ate chapati, rice, and potato vegetable. If I'll ask, what you will eat in this week, in the remaining week, probably you will give an answer, sir, I need to check with my mother. I need to check in my family. Right? Okay? I don't know.
Sir.
So on 31st March 2008, fair value less cost to sell is given. It means the question is asking you, what question is asking? If you read this question, the question is asking you to do the impairment assessment to estimate the recoverable value on 31st March 2008. तभी तो मैंने कैरिंग वैल्यू निकाली ना 31st March 2008 की. कॉस्ट माइनस डेप्रीसिएशन, एक्यूमुलेटेड डेप्रीसिएशन. इसका मतलब ये कैश फ्लो कब के दिए हुए हैं? These cash flows are given for the next 5 years, which is 2009, 10, 11, 12, and 13. Okay?
Yes, sir. Understood.
Understood?
Yes.
So you need to be very careful while reading the question. Right? You need to be very careful. Okay? It is for next 5 years. Right? So on 31st March 2008, if the question is asking that you need to check the impairment loss, you need to compute the recoverable value. So of course, if these cash flows are given, you have got it very right that the life is 10 year and this residual value is given at the end of 5 year. 5 year कब से? 5 year अगले 5 साल के बाद से, right? अगले 5 साल के बाद से 5 year. Clear?
Yes, sir.
Right? So question also wants to test this part also. Right? So that is why I have computed this carrying amount on 31st March 2008, fair value less cost to sell on 31st March 2008, and the value in use on 31st March 2008. And this is how I got the recoverable value. Okay? ये clear है ना अभी? Next पे चले?
Yes, sir.
Okay. Let's move to the next. Now, what is my impairment loss on machine A? What is my impairment loss on machine A? What is my recoverable value? Recoverable value of machine A. Recoverable value of machine A as at 31st March 20x8. मेरी recoverable value क्या है machine A की? Higher of fair value less cost to sell and value in use. What is my fair value less cost to sell? 4,50,000. What is my value in use? 489,730. Which is higher? What is higher?
Value in use.
Value in use. Recoverable value. My recoverable value is 489,730. What is my carrying amount?
5,25,000.
Impairment loss होगा क्या? होगा?
Yes, sir.
Carrying amount is higher than the recoverable amount. Impairment loss होगा या नहीं होगा?
होगा, sir.
What is the formula of impairment loss?
Carrying value minus recoverable value.
Carrying amount minus recoverable amount. Carrying amount, recoverable amount. Carrying amount minus recoverable amount. My carrying amount is this much and my recoverable amount is this much. What is my impairment loss? My impairment loss is 35,270. This is my impairment loss. Right? So you got 4 marks up to this level. You got 4 marks. Okay. So we computed the impairment loss on individual machine A. We computed the carrying value, fair value, value in use, etc., etc. Now let's move further. अभी तक हमने ये सब कर लिया. अब क्या करना है? और कुछ करना है? कुछ करना है क्या? Please guide me. I don't know what to do. Guide me. Machine B, carrying amount we have computed. Fair value and cost to sell we can't compute. Goodwill and inventory value is given, right? Now in the last paragraph, this is talking about what? 31st March 2008 पे recoverable value दिया है cash generating unit का. So I need to do the impairment assessment of cash generating unit. Now let's go to the cash generating unit. Okay, working note 4 and 5. 4. Working note 4. Working note 5. Working note 6 is my impairment loss on cash generating units. Okay. Impairment loss on CGU. Now, what is the carrying amount of CGU? What are the items in the CGU? Machine A. Can you help me quickly? Machine B, inventory, and goodwill. What is the carrying amount?
5,25,000 for machine A.
5,25,000 of machine A. Okay.
3,50,000 machine B.
350 machine B.
2 lakh inventory.
2 lakh is inventory. Okay. Then
1,50,000 goodwill.
150 goodwill, 2 lakh inventory. 2 lakh inventory, 150 goodwill. The total carrying amount is
12,25,000.
And what is the recoverable value is given? The recoverable value is also given. Na? What is recoverable value?
10 lakh.
10
10 lakhs.
So what is the impairment loss on CGU? What is the impairment loss on CGU?
2,25,000.
2,25,000 impairment. 2,25,000 is the impairment loss. Correct? This minus this. 2,25,000 is the impairment loss. Yes. 2,25,000 is the impairment loss. Now the question comes, how to allocate this impairment loss in these multiple assets? That is number 1. Number 2, what is the carrying amount after impairment loss of these assets in the CGU? Help me. कि कैसे allocate करूं impairment loss?
सर मशीन ए का कैलकुलेट किए थे ना 35270.
So what is the priority? Tell me, what are the rule? When there is an impairment loss on the CGU, the rule number 1, absorb, allocate all the impairment loss to the goodwill first. तो सबसे पहले क्या करूंगा? 225 में से पूरा का पूरा
1,50,000.
150. Goodwill will become 0. Goodwill will become 0. Now the remaining, what is my remaining impairment loss? What is my remaining impairment loss? 75,000 ही तो बचा.
Yes, sir.
75,000. How to allocate this 75,000? Should I allocate anything on inventory? So I should allocate this 75,000 in the pro rata, in the ratio of machine A, B, and inventory. Should I allocate any amount on inventory?
No, sir.
Why no?
Ind AS 2 exemption.
Because inventory itself is covered under Ind AS 2. Inventory itself is at recoverable value. No impairment loss on inventory. So means recoverable value of inventory is 2 lakh. Right? What to do now? I have left with 75,000. What to do now? This this 75,000 has to be allocated in the ratio of machine A and machine B. Correct? Minus
Yes.
75,000 multiply by 525 divide by what? This plus this. इसके proportion में divide by 870, right? Again, minus 75,000 multiply by 350 divide by what? This plus. क्या ये कैलकुलेशन ठीक है?
बट सर जरूरत नहीं था क्योंकि 45 गया 70 रिमेनिंग तो 30 उससे ही जाएगा.
नहीं, वो जरूरत तो एक अलग चीज है, बट क्या नंबर ठीक है ये? Whether number
नहीं,
is right?
No, sir. No, sir.
Why no?
Because we have already calculated for machine
Impairment
A.
loss for machine A.
So my dear students, you should always compute what is the allocated impairment loss. You should always compute, like I have computed. And just forget about this machine B. Machine A I have computed and the impairment loss comes out at 45,000, right? But what is the actual impairment loss on this machine A? The actual impairment loss is 35,270. 35,270. So if on a particular asset, if an impairment loss can be computed, so the impairment loss, that impairment loss has to be taken into consideration for that particular asset, right? That impairment loss has to be taken into consideration for that particular asset. Okay. So in this case, how much amount I should take? I should take the actual impairment loss on this individual asset. Clear? तो अब क्या होगा? मशीन बी में क्या होगा बाय डिफॉल्ट?
Balancing figure.
Balancing figure. So machine B will be balancing figure. This impairment will be balancing figure, right? और कितना अमाउंट होगा?
39,730.
39,730. 39,730. 39,730. Okay. 39,730. And मेरे carrying value क्या होगी? So this is the recoverable value. And these are the revised carrying value post impairment. So what is my revised carrying value post impairment? Revised carrying value, revised carrying amount post impairment. Okay. Is that clear?
Yes, sir.
यहाँ तक कोई problem? Any problem till now?
No, sir.
Okay. So let's go further. So we have computed the impairment loss, allocated the impairment loss on the multiple assets within CGU. We have also computed the revised carrying value. The question said, in the next year, the company has done the assessment of recoverability of CGU and found that the value of CGU is 11 lakh as on 31st March 2009. Recoverable value of machine is 450 and combined machine A and B is 760 as on 31st March 2009. In the next year, the value has gone up. So this question is asking you the reversal of impairment loss. The question is asking you the carrying value of CGU. What should be the carrying value of the CGU? And the question is also asking you the prospective depreciation for the year 8-9. Okay. So now let's compute the reversal of impairment loss. Okay. सही है ना? क्लियर है यहां तक? कोई चैलेंज तो नहीं? Yeah. Yes. Working notes 7. Reversal of impairment loss on CGU as at 31st March 20x9. What are the assets in the CGU? Goodwill. अब गुडविल की जो कैरिंग अमाउंट है, द रिवाइज कैरिंग अमाउंट ऑफ द गुडविल, ओके. So this goodwill has completely charged off. The goodwill has completely charged off. Okay. So do we need to reverse the impairment loss on goodwill? Do we need to reverse the impairment loss on goodwill? Yeah.
No, sir.
Impairment loss on goodwill cannot be reversed. And before this, so the question was asking about the prospective depreciation also. Let me compute the prospective depreciation. I forgot that. क्वेश्चन में एक जगह पूछा था ना, प्रोस्पेक्टिव डेप्रिसिएशन भी पूछा था ना. क्वेश्चन नंबर जो 2 था उसमें, so the question has asked compute the prospective. First the question has asked the carrying impairment loss on CGU and carrying value of each asset after charging impairment loss. Okay. Then the question has asked the prospective depreciation for the year 8-9 on the above asset, right? So let me go to prospective depreciation. Prospective depreciation for FY 2089. Machine A and machine B. Machine A, machine B. Right. What was my carrying value? What was my carrying value as at 31st March 2008? वैल्यू क्या थी बताओ तो सही. अभी तो निकाला हमने वैल्यू. What was my revised carrying value after impairment? Sorry. ये क्लियर है ना आपको? कैरिंग अमाउंट का फॉर्मूला क्या होता है? कैरिंग अमाउंट इज इक्वल टू कॉस्ट माइनस एक्यूमुलेटेड डेप्रिसिएशन माइनस एक्यूमुलेटेड इम्पेयरमेंट लॉस. ओके. यस. On 31st March 2008, how much year has gone? 5 years has gone for machine A. How much years have yet to go? कितने साल बचे हैं?
5.
5 बचे हैं. 5 बचे हैं. तो डेप्रिसिएशन क्या होगा? What will be the depreciation?
489,730 minus 50,000
depreciation
divided by
क्या
5.
होगा? Depreciation. What will be my depreciation for the next year?
Sir, it will be 87,946.
You remember there was a residual value also. You remember residual value at the end of 10th year?
Yes, sir.
Yeah.
Yes, sir.
जब आप कैरिंग अमाउंट निकालते हो तो कैरिंग अमाउंट कैसे निकालते हो? कॉस्ट माइनस एक्यूमुलेटेड डेप्रिसिएशन माइनस एक्यूमुलेटेड इम्पेयरमेंट लॉस. यू आर डिडक्टिंग accumulated depreciation and accumulated impairment loss from cost, right? But for computing depreciation, you are reducing residual value from cost. Cost minus residual value divided by useful life. Cost minus residual value divided by useful life. Okay. So what is my depreciation for this? Cost minus residual value 50,000 divided by remaining life 5 years. What is the remaining life? 5 years. And what is the remaining life for machine B?
7 years.
7 years. Okay. Whether machine B has any residual value? Answer is no. Machine B does not have any residual value. Okay. Machine B does not have any residual value. So this is my depreciation. If this is the depreciation, what is my carrying amount as on 31st March 2009? What is my carrying amount? Carrying value as at 31st March. What is my carrying amount? Whether this calculation is clear? Is this calculation clear?
Yes, sir.
Now we are moving to the reversal of impairment loss, right? Reversal of impairment loss. We'll go there. Okay. So what is my carrying value? What is my recoverable value? So we will go to 31st March 2009. Okay. Friends, first of all, on 31st March 2009, do I need to reverse impairment loss on goodwill? Yes or no?
No.
No, I should not reverse. So on 31st March 2009, my recoverable value is given. My recoverable value is given, right? So what is given in the question? The question does not talks about the goodwill, and goodwill cannot, impairment loss on goodwill cannot be reversed. The question is talking about the recoverable value of machine A 450, combined machine A and B 760. So recoverable value of machine A is given and combined machine A and B is also given. तो क्या मैं इसकी वैल्यू निकाल सकता हूं? रिकवरेबल वैल्यू मशीन ए एंड बी की निकाल सकता हूं. 450 इज द वैल्यू ऑफ मशीन ए और मशीन बी की वैल्यू पता है. मशीन बी की वैल्यू नहीं पता, बट दोनों की वैल्यू पता है. आई नो द वैल्यू ऑफ बोथ 760. सो द रेसिडुअल इज 760 minus 450. 3,10,000 is the machine B value. The inventory value is not given. What to do with the inventory value? नहीं पता तो क्या करें? सेम वैल्यू मान लें, जो 31st मार्च 2008 को वैल्यू थी वो वैल्यू ले लेते हैं, राइट? दिस इज द वैल्यू. This is the recoverable value. What is my recoverable value? This is my recoverable value. 450, 310 and 2 lakh. This is my recoverable value. And what was the fair value of the CGU is given? CGU की fair value क्या दी हुई है? इसमें दिया था ना CGU की fair value. The recoverable value of CGU, the company has done the assessment of recovery, found that the fair value of the CGU is 11 lakh on 31st March 2009, right? And recoverable value of the assets are given. Recoverable value of the assets are also given. Okay. So on goodwill, we cannot reverse impairment loss. Now, this is the recoverable value. And what are the carrying value? What are the carrying value? Carrying value of goodwill is 0. Carrying value of machine A is 401,784. Carrying value of machine B is 265,946. Carrying value of inventory is 2 lakh. Okay. Now, friends, what should be the revised carrying value after reversing an impairment loss? Revised carrying value क्या होगी? Recoverable value of machine A is 450 and the carrying value of machine A is 401,784. So should I increase the value of machine A by 450 minus 401,784?
No, sir.
Okay, तो क्या करूं? What should I do?
Sir, we will consider that if impairment would not have occurred, then what will be the value? And that value and the recoverable value we will compare and take the lower of it.
Very good. So very good. Yes. So basically what happened when you reverse the impairment loss. So let me take you to the concept which I have, explained in the detailed class. Ind AS 36 provides that after reversal of an impairment loss, the revised carrying value should be lower of what? Lower of recoverable value, and had the asset never been impaired, then what would be the carrying value? अगर ये एसेट कभी भी इंपेयर नहीं होता तो इसकी कैरिंग वैल्यू क्या होती? ओके, इसकी कैरिंग वैल्यू क्या होती? So we need to compute the revised carrying, we need to compute the carrying value. So carrying value, had this asset never been impaired, okay. अगर ये एसेट कभी भी इंपेयर नहीं होता तो इसकी कैरिंग वैल्यू क्या होती? Goodwill 0. Machine A. What was the value of the machine A on 31st March 2008? What was the value of the machine A? Machine A की value क्या थी? The carrying amount was 525. You remember?
Yes, sir.
525. So, एक साल का depreciation 31st March 2008, the carrying amount was 525. Now, what is the depreciation for 1 year?
95,000.
95,000. 95,000 is the depreciation for 1 year. Is this clear to everyone? अगर ये 5 साल की carrying value थी 525, अगर मुझे 6 साल के बाद की carrying value चाहिए तो क्या होगा? 6 year का accumulated depreciation होगा. Okay. And what is the carrying value? What is the carrying value of machine B had this asset never been impaired? The value was 350. The carrying value was 350. And what was the depreciation? What was the depreciation per annum? Per annum depreciation is 50,000. So 350 minus 50. 3 lakh. 3 lakh is the value, right? 3 lakh is the value. Inventory assuming same. So friends, after reversal of impairment loss, your revised carrying value should not be more than. It means it should be lower of recoverable value and carrying value had the asset never been impaired. What is lower? What is lower of these two? What is lower of these two? Lower. What is lower of these two?
867, 734.
What is lower of these two? 430 is the lower of these two. Okay. What is the lower of this machine B? 3 lakh. And this 2 lakh. Okay. And what is the impairment loss reversal? If this will be the revised carrying value, what is the impairment loss reversal? कितना होगा impairment loss reversal? आपकी actual carrying value क्या है? This is your actual carrying value. What is the impairment loss reversal? Impairment reversal of impairment loss. क्या होगा reversal of impairment loss? 430 minus. Right? Is this calculation clear to everyone?
So last वाली नहीं clear है, reversal.
Reversal is not
It
clear.
is not. Yes, sir.
So up to this level, 31st March 2008, we have computed the impairment loss on this CGU. We have allocated the impairment loss and we have computed the revised carrying amount post impairment as on 31st March 2008. Is that clear to everyone? ये वाला कैलकुलेशन क्लियर था? इम्पेयरमेंट लॉस हमने जो एलोकेट किया था,
Yes.
जो गुडविल हमने 0 कर दी थी, ये क्लियर है? हाउ वी हैव कंप्यूटेड द डेप्रिसिएशन फॉर 2008-9?
Yes, sir.
जो भी कैरिंग वैल्यू आई, रिवाइज कैरिंग वैल्यू आई ना, ये यहां से आई. ये रिवाइज कैरिंग वैल्यू हमने प्रोस्पेक्टिव डेप्रिसिएशन चार्ज किया. ये कैरिंग वैल्यू एज ऑन 31st March 2009 क्लियर है?
Yes, sir.
अब हम जब इम्पेयरमेंट लॉस का रिवर्सल चेक कर रहे हैं क्योंकि सीजीयू की वैल्यू बढ़ गई, तो व्हाट इज माय एक्चुअल कैरिंग वैल्यू? मेरी एक्चुअल कैरिंग वैल्यू तो क्लियर है ना, यहां से आई 401265 एंड इन्वेंट्री का कुछ नहीं दिया तो मैं सेम वैल्यू मानूंगा. रिकवरेबल वैल्यू क्वेश्चन में दी हुई है 31st March 2009 की 450, 310, 2 लाख. तो मेरी एक्चुअल कैरिंग वैल्यू 31st March 2009 पे माय एक्चुअल कैरिंग वैल्यू इज 401, my recoverable value is 450, but standard says that when you are reversing an impairment loss, your revised carrying value should not be more than, it should be lower of recoverable value and you need to compute your carrying value. अगर impairment loss कभी भी चार्ज नहीं होता तो इस डेट पे carrying value क्या होती? Are you getting me? अगर ये impairment loss कभी भी नहीं होता, 31st March 8 पे impairment loss नहीं होता, तो मशीन A की carrying value क्या होती? You remember cost was 10 lakh. Residual value was 50,000. Then life was 10 years. तो 6 साल का depreciation कितना होगा? 95 multiply by 6 होगा ना? तो carrying amount कितना आएगा? 430. वैसे ही 5 lakh is the cost of machine B. 10 year is the life. 6 ईयर के बाद का डिप्रिसिएशन कितना होगा? सॉरी, 4 ईयर के बाद का, फ्रॉम 2005 to 2009, 2 lakh. Carrying value क्या होगी? 3 lakh. So I have computed this carrying value. Had this asset never been impaired, तो आज carrying value क्या होती? Right? I have computed that.
Yes, sir. Yes, sir.
Then I have compared. Then I have compared my, my carrying value which would have been versus carrying value which is actual, right? And the actual carrying value is lower. So this is what I have computed, right? So my revised carrying value is lower of these two, recoverable value and computed carrying value, right? So this is my revised carrying value. So what is my revised carrying value? Revised carrying value is lower of recoverable value and computed carrying value Standard wants to see that you cannot reverse more than, अगर कभी भी इम्पेयरमेंट नहीं होता तो क्या होती वैल्यू, उससे ज्यादा आप रिवर्स नहीं कर सकते उस कैरिंग वैल्यू से ज्यादा, राइट? सो दिस इज माय रिवर्सल ऑफ इम्पेयरमेंट लॉस. आई होप दिस इज क्लियर नाउ. I hope it is clear now.
Yes, sir.
So friends, it's 8:46 now. It was a comprehensive question. Let me tell you, this question 4-5 concept was tested. Concept number 1, the computation of fair value less cost to sell, computation of value in use, computation of carrying amount applying cost minus residual value divided by life, right? And then computation of impairment loss on the individual asset. Then this question has tested the computation of cash generating unit, computation of impairment loss on cash generating unit, allocation of impairment loss on cash generating unit, and this question is also tested that what happened if one of the asset in the cash generating unit you have already estimated the impairment loss, right? Then this question have also tested what is the depreciation in the prospective year 2008-9, what is the actual carrying value at the end of 31st March 2009. Then the question has given you the higher cash generating unit value, and question wants to test are you also reversing goodwill, because this is coming out at 9,60,000, the recoverable value total, and the recoverable value is giving 11 lakh. You remember आपके पेपर में 11 लाख रुपए की वैल्यू दी हुई है क्वेश्चन में. Yes or no? $11 lakh का वैल्यू है ना. Let me show you the question. The value is 11 lakh. It is written now, and found that value of such CGU is 11 lakh. So where the students are making mistake, they just put 1,40,000 is in the goodwill. However, the goodwill, the impairment loss of goodwill cannot be reversed. Okay. Then this question have tested when you are reversing impairment loss, how will you compute the impairment loss to be reversed? So you should be aware about that after reversal of impairment loss, your carrying value should not be more than the lower of recoverable value and carrying value had the asset never been impaired. तो आपको रिवाइज कैरिंग वैल्यू निकालनी पड़ेगी, फिर रिवाइज कैरिंग वैल्यू वर्सेस एक्चुअल कैरिंग वैल्यू, दैट विल बी द रिवर्सल ऑफ इम्पेयरमेंट लॉस, right? So this question has tested you 6-7 aspect of the impairment loss standard, and one of the comprehensive question, very detailed question, and very good question, I would say. Okay, right? So friends, it's 8:49 now. Let's have a 5 minutes break. Okay, then I will proceed further. Yes. Now let's go to the question number 2. Very good questions on the computation of value in use. You remember, computation of value in use require two important aspects. What are the two important aspects which is required for value in use?
Fair
Mr.
value less
Praveen?
cost.
Sorry? What are the two items which are required for computation of value in use? Value in use is equal to present value of future cash flows. Means you need to estimate future cash flows, number 1. Number 2, you need to discount it to arrive at present value, means discount rate. So discount rate and future cash flows. These two are the important aspects for computation of value in use. Okay. Friends, now this question is asking you to compute value in use, right? And let's discuss this question. A Limited owns a machine used in the manufacture of steering wheels, which are sold directly to major car manufacturers, right? The machine was purchased on 1st April 20x1 at a cost of rupees 5 lakh through a vendor financing arrangement on which interest is being charged at the rate of 10% per annum. Okay. So this machine was purchased at 5 lakh rupees. The cost of the machine is given through a vendor financing arrangement. Means this company has taken a loan from the vendor, means on a credit basis, right? And vendor is charging an interest of 10%. This is as good as the loan taken from the bank, right? To purchase a machinery. So interest rate is given, cost of machinery is given. During the year ended 31st March 2003, E Limited sold 10,000 steering wheels at a selling price of 190 per wheel. During the year ended 31st March 2003. And this machine was purchased on 1st April 2001. Dates are very important. Okay, so 31st March 2003, the company has sold 10,000 steering wheels at a selling price of 190 per wheel. What is the total cash inflow? 10,000 multiplied by 190, but this is for 2002-2003. The most recent financial budget approved by the company's management covering the period 1st April 2003 to 31st March 2008, including that the company expect to sell each steering wheel for 200 rupees during 3-4. The price rising later is in line with the forecast inflation of 3% per annum. What this paragraph talks about? Tell me. What this paragraph talks about? अभी तक जो 3 पैराग्राफ पढ़े, so what is the first impression in your mind? The machine was purchased on 1st April 20x1. Cost was given, interest rate was given, and after 2 years, which is 31st March 20x3, how much steering wheel the company has actually sold is given. And in the next paragraph, which is highlighted, so this budget which this company has got approved, this budget is for the period 1st April 2003 to 31st March 2008. 3, 4, 4, 5, 5, 6, 6, 7, 7, 8, right? 5 years. Okay. Including that the company expect to sell such steering wheel for 200 rupees per wheel per steering in 2003-4, and the price, and for the next 4 years. So in 2003-4, it is 200 rupees, and for the next years, the price will go up by 3% per annum. Okay. And in the next paragraph, so this paragraph talks about 5-year forecast on 1st April 2003. This paragraph talks about the price per steering wheel. For the first year, I mean to say 3-4, it is 200 rupees. Then it will go up by 3% every year. During the year ended 31st March 20x4, company expect to sell 10,000 steering wheels. Right? Now quantity is given. The number is forecast to increase by 5% each year until 31st March 2008. In this paragraph, it is talking about price, and in this paragraph, it is talking about the quantity. And price multiplied by quantity will give you the cash inflow. Any doubt up to this part? Any doubt in the question? Up to this level? Any doubt? Yeah? E Limited, the company, estimates that each steering wheel cost rupees 160 to manufacture, which includes 110 variable cost, 30 fixed over, and 20 transport cost. Now the cash outflow is also given. Cash outflow is also given, right? It is also given. And what is written? What is given here? What is the use of this paragraph? Tell me, friends. Otherwise, you will not be able to solve. Till the time you will read gradually and understand gradually, you will not be able to solve it. Tell me. Salesh, what is the meaning of this?
Sir, it is telling about the expenses that we will incur. So, with the help of this, we can take out the net cash flow.
It is talking about the net cash flow. So basically, you're right. So this is, basically cash inflow. After cash inflow, it is given the cash outflow, right? It is given the cash outflow. Okay. Then the costs are expected to rise by 1% during the next year during 4-5, and then by 2% per annum till 31st March 2008. So the cost is given for 3-4. Then it will go up by 1% in 4-5, and then 2% up to 31st March 2008. During 5-6, the machine will be subject to regular maintenance costing rupees 50,000. One more cost is given. In 3-4, the company expects to invest in a new technology costing rupees 1 lakh. This technology will reduce the variable cost of manufacturing each steering wheel from 110 to 100, and the share of fixed overheads from 30 to 15, subject to the availability of technology which is still under development. Hanji, what is the relevance of this paragraph? Anushi, what is the relevance of this paragraph?
Not very clear, sir.
Not very clear.
No, sir.
Anyone who wants to attempt?
We don't know whether the provision has been created or not. It is just an expectation.
See, two aspects. It is talking about new technology, right? So, I told you when you need to estimate cash flow, you need to estimate cash flow in the current condition of the asset, right? So this company is expecting to invest in a new technology, right? And then they will have a cost reduction. So those expectation is not taken into consideration because these are not committed. So, right. And standard says that, the committed word is used for restructuring. Restructuring means when you are discontinuing, you are disposing of, right? So you will invest in a new technology, then you will have a cost savings. So those kind of, cost savings and those kind of investment should not be considered. And the cash flow has to be considered only to the asset in the current condition. Okay. And hence this aspect has to be ignored. The company is depreciating the machine using the straight line method over the machine 10-year useful life. The current estimate based on the similar assets that have reached end of their useful life of the disposal proceeds from the selling the machine is 80,000 net of disposal cost. E Limited expect to dispose of the machine at the end of March 2008. what is the crux of this entire four and half line? इस पूरे पैराग्राफ का क्रक्स पता है क्या है? इस पूरे पैराग्राफ का what is the crux?
Depreciation part.
Sorry. What is the crux of this paragraph? The crux of this paragraph is the residual value is given. Residual value is given. And what is the residual value?
80,000.
80,000. Residual value is given. Okay. So 80,000 residual value is given. And this residual value is given on 31st March 2008 because the company is expecting that the asset will be disposed of. The asset will be disposed of by 2008. Okay. The company has determined a pre-tax discount rate of 8%, which reflect the market assessment at the time value of money and the risk associated with this asset. So discount rate is also given. Okay. Tax rate is also given. You need to determine the value in use of the machine in accordance with Ind AS 36. So let me solve this question on the Excel file. Okay. Let me solve this question. Question number 2. So let's start the question number 2. I hope the Excel file is visible to everyone. Is it visible to everyone?
Yes, sir.
Excel file.
Yes, sir. Visible.
So now we need to estimate the future cash flows. Okay, we need to estimate the future cash flow. Inflow and outflow we need to estimate. So first of all, computation of future cash flows and value in use. Okay. Value in use. So particulars. Then your year 2003-4, right? 2003-4. Then 4-5. 5-6. 6-7. 7-8. Okay. So now we need to compute the cash inflow. Cash inflow. And what is my cash inflow? You remember quantity was given. The quantity of steering wheels was given. How much was the quantity in 2003-4? How much is the quantity in 2003-4? 10,000 was given, right? So let me read that. During the year ended 31st March 2004, A Limited expect to sell 10,000 steering wheel. 10,000. And it is also written that the number is forecast to increase by 5% each year. This multiply by 105%, right? Each year it is gone up by 5%. So every year it is gone up by 5%. Multiply by 105%. This is the quantity. Now what is the price? What is the rate? What is the rate? The question says that the price of the steering wheel is 200 rupees. 200 during 3-4 and which is expected to go up by 3% every year. So for next year, it is 200, and then it will go up by 3%. So price is 200. Okay. This is the price. I hope the calculations are clear for everyone. If any part is not clear, you can just stop me and you can ask that part. Okay. I hope it is clear to everyone.
Clear, sir.
What is my estimated cash flow? Yeah. Estimated cash flow. Estimated cash inflow. Okay. Now I need to compute cash outflow. Yes. I need to compute cash outflow also. What is my cash outflow? There is one cash inflow also. There is one more cash inflow. एक और कैश इनफ्लो रह गया. वो कौन सा कैश इनफ्लो है? Residual value, terminal value. And how much is the terminal value? How much is the terminal value at the end of the year? 7, 8?
80,000.
80,000 is the value. Okay. So what is my estimated cash? I think no more cash inflow is there, correct? इसके अलावा तो कुछ नहीं है ना? Now what is my cash outflow? My cash outflow is, the cost and quantity was given. Yes. Cost and quantity. The quantity is already there and the cost was given. What is written about the cost? So the company estimate that each steering wheel cost 160 to manufacture. 160 rupees the price. Okay, for 2003-4. And the price will go up by 1% in the 4-5 and 2% then after. Okay. Quantity is not given about the cost. Quantity is not given about the cost. What to do? So quantity is already there. Quantity is already there for the cash inflow. So same quantity will be there for cash outflow also.
10,000 is there.
Yes. What is the rate? What is the rate of the cost? For the current year, क्या price होगा? Cost का. The price is 160 for the current year. 160. It will go up by 1% in this year. 1%. Then it will go up by how much? 2% every year. 2%. Multiply by 102%. 102%, 102%, right? So this is the rate. Then what is my cash outflow on account of this part? What is my cash outflow? On account of this, मेरा cash outflow कितना होगा? This multiply by this. Okay. What is my other outflow? What is my other outflow? Maintenance. You remember a regular maintenance cost was also given. And when this cost was given, this cost was given for regular maintenance cost was in the
2005-6.
2005-6. Yes, 2005-6 of rupees 50,000. So this will come here.
Yes.
2005-6 of 50,000 rupees, right? This will come here. Now, what is my total? What is my total outflow? What is my estimated cash outflow? What is my estimated cash outflow? इसके अलावा भी कोई है क्या outflow? Is there any further outflow? No.
No, sir.
What is my net outflow of cash? What is my net cash flow? Net cash flow from continuing use of the asset. Net cash flow कितना है? It is inflow minus outflow. It is positive, right? It is positive. Now, what is the discount rate? Present value factor at the rate of 8%. 8% is the discount rate, correct? 8% ही है ना?
Yes, sir. Yes, sir.
So what is my discount rate? 1 divided by 1.08 divided by 1.08. Likewise, okay. This is the present value factor. Okay. Now, what is the present value? What is the present value? Present value is this multiplied by this. So what is my value in use? मेरा value in use क्या होगा? What is my value in use? My value in use is the present value of the future cash flows, which is 20,71,692. This is my value in use. This is the answer. This is my value in use. Okay. This is my value in use. I hope this is clear to everyone. And
Yes, sir.
friends, will you also take the impact of tax in the cash flow? आप क्या टैक्स यहाँ पर एक टैक्स का रेट भी दिया था 30%. Whether the tax rate has to be considered? Tax is not required to be considered. Tax is not required to be considered for the purpose of cash flow. The cash flow you need to see without considering the financing activity and the tax, without considering, right? For example, you have taken a loan for the asset. Okay. So you will not take that interest on that loan, right? You have to take the cash flow from using the asset. Okay. Clear? Is that clear? Any doubt? Any problem? Right? Okay. So now, question number 3. Let's discuss question number 3. On 1st January, I hope this Word file is visible to everyone.
Yes, sir.
Question number 2 is clear to everyone, na? No any challenge in question number 2?
Sir, can you just explain for the tax rate again?
So basically, you know, the tax rate is given in this question, but whenever you estimate cash flow, it always has to be pre-tax cash flow, right? Standard says that the cash outflow from taxation activity should not be considered as a part of the cash flows for computing value in use. Okay. So that is what I have told you. Because, you know, at times what mistake you will make. So basically the cash flow which we have arrived, total inflow minus total outflow. At times students make a mistake. They consider this as a profit and they apply the 30% tax. And then whatever is the after tax amount, they discount that at a present value and they aggregate this entire cash flow and they compute the value in use, which is wrong. The value in use has to be calculated pre-tax, not post-tax. Okay. right?
Yes.
Question number 3. On 1st January 2000, on 1st January year 1, the company Q purchased a machine costing rupees 2,40,000 with an estimated useful life of 20 years and zero residual value. So, year 1, 1st January, they purchased a machine of 2,40,000. Life is 20 years, residual value is zero. What is the depreciation per annum? What is per annum depreciation?
12,000.
12,000 is the per annum depreciation. Depreciation is computed on a straight line basis. Okay. So, student, I will request each one of you, right? Not who are present right now, who will be listening this video, who will be attending this class later on even. So, whenever you solve a question, please try to answer with the question when you're reading. Okay. Doesn't matter right or wrong, at least. So, I haven't read the further information, but at least I have framed something in my mind that cost is itna, life is itna, residual value is zero. Iska matlab depreciation is 12,000. And my answer will change if I'll get some updated information. Okay. But for the time being, for the first 1.5 line, the answer is 12,000 rupees of depreciation. Okay. Depreciation is computed on straight line basis. Very good. The asset had been revalued on 1st January year 3 to 2,50,000, but with no change in useful life at that date. Year 1, year 2, year 3. In the 1st January of year 3, which is in the 3rd year, the revaluation happened and the revalued amount is 2,50,000. Can you see? The cost was 240. Now this revaluation is 250. Means the asset value has gone up. On 1st January year 4, it is talking about 1st January 4. Year 1 khatam, year 2 khatam, year 3 khatam, 1st January year 4. An impairment review showed the machine's recoverable amount to be 1 lakh and its estimated remaining useful life to be 10 years. Right? On 1st January year 4, an impairment review showed the machine's recoverable amount to be 1 lakh and its estimated remaining useful life to be 10 years. Okay. So estimated useful life is 10 years and on 1st January 2004, the recoverable value has gone down to 1 lakh rupees. Okay. It was 250 in the last year. In this year, it become 1 lakh and the life has also changed. Okay. The total life was 20 years. So technically speaking, the remaining life should be 17 years, but now it is only 10 years. So it means this question is talking about computation of depreciation, then computation of carrying value, then reversal, then there is a revaluation surplus, then there is a impairment loss and prospective change of depreciation also. Calculate the carrying amount of the machine on 31st December year 2 and the revaluation surplus arising on 1st January year 3. So it is asking the carrying amount on the year 2 and the carrying amount in the year 2 and the revaluation surplus on the 1st January year 3. Then it is asking carrying amount of the machine on 31st December year 3. So after revaluation, it is asking the carrying amount on December on year end 3, right? Immediately before the impairment. And then it is asking impairment loss recognized in the year to 31st December year 4 and its treatment thereon. Depreciation charge in the year to 31st December year 4. During the course of utilization of machine, the company did not opt to transfer part of the revaluation surplus to retained earning, which is given in the question. That whatever is the retained revaluation surplus, company has not transferred any revaluation surplus to retained earnings. Yes. Is that question clear to everyone?
Yes, sir.
Is this question clear to everyone?
Yes,
so year one, no problem. The cost was 240, depreciation life was 20 years, zero residual value, 12,000 rupees of depreciation, no problem. Year 2, no problem. But in the beginning of year 3, there is an there is a revaluation. Okay. And then year 3, you need to compute the revised depreciation and revised carrying value. Then year 4, there is an impairment. In the beginning of year 4, there is an impairment. So you need to check the impairment adjustments also. And then you need to compute the carrying value at the end of year 4, right? This is what the question is asking. Shall I start solving the question? Whether I should use the Excel file or I should explain it on the Word file only.
So
Word file will be.
Word file.
Word file is okay?
Yes, sir.
Okay. Yes, because this is simple question. So after reading the question, you understood the concept, right? Calculation of carrying amount of machine at the year end 2. Cost of the machine 240. 2-year depreciation 12 multiplied by 2, 24,000. This is the carrying amount at the end of year 2. Now, on the beginning of year 3, what is my carrying amount? 260. What is my revaluation amount? 250. What is my revaluation surplus? 250 minus 216, 34,000. Calculation of impairment loss at the end of year 4. So, at the end of year 3, what is my revaluation surplus? 34,000, right? So, this is my end of year 3. वही लिखा है ना, year 3 के end में ही था ना. The asset had been revalued on 1st January, year 3 to 250, but with no change in useful life at that date, right? So basically 34,000 is the revaluation. Now I need to compute the impairment loss at the end of year 4, but I need to also compute the depreciation for year 3 also, right? When machine is revalued on 1st January year 3, depreciation is charged on the revalued amount. So basically this statement is not correct. Calculation of carrying amount of the machine on 31st December year 3. It is not 31st December, it is 1st January. It is 1st January. Okay. सही है ना? 1st January होना चाहिए ना? होना चाहिए नहीं होना चाहिए 1st January? ये 1st January के बिगनिंग में रिवैल्यूएशन हुई है. लिखा तो है beginning of year 3, then revaluation surplus. Now we need to compute depreciation for year 3. तो carrying value कितनी होगी? 250 opening carrying value. What is the useful life, remaining useful life?
18 years.
18 years. Very good. 18 years. So 250 divided by 18, 13,889. Your carrying amount of the asset at the end of year 3 is this much, right? So let me write here only. So depreciable amount year 3, depreciable amount at the beginning of year 3, $250,000. $250,000. Then what is your depreciation? Depreciation for year 3. What is your depreciation for year 3? Sorry.
13889.
So your depreciation for year 3 will be 250 divided by 18, which is 13889. 13889. Carrying amount at the end of year 3. How much is the carrying amount at the end of year 3? 250 minus 13889.
236,111.
236,111, right? This is the carrying amount. Okay. Now there is an impairment. So we are clear up to this part, right? Now, what is the recoverable value on the year 4? The recoverable value is 1 lakh. What is the impairment loss? 1,36,111. So what is the treatment of 136,111? What is the treatment of 136,111?
Up
Whether
to
this in-
34,000, we will reverse the revaluation, and then remaining amount we will charge to impairment loss.
Very good. Very good. So up to 34,000, 34,000 should be reversed from revaluation surplus OCI, and the remaining amount of 1,02,111, right? This will be charged to PNL. This impairment loss will be charged to PNL, 1,02,111, and 34,000 will be reversed from the revaluation surplus OCI. Okay, right? So, and what is the depreciation charge in the year 4? Now this 1 lakh will be depreciated over the remaining 10 years, which is 10,000 rupees of depreciation every year. Okay, clear? Is that clear to everyone? Yes or no?
Yes, sir.
Clear in mind or clear from mind?
In mind.
Clear in mind, sir.
Very good. So now let me take you through question number. Just allow me a minute. Let me see the relevant question. Yes. Question number 6. Let's go to the question number 6. Okay. I would request you to read question number 6. When this question came in exam, almost 40-50% students got confused. Right. And hence, I have captured question number 6 for the explanation. Read this question number 6. At 31st March 2001, the assets of a cash generating units are being reviewed for impairment. The carrying value of the cash generating unit net assets is 65 lakh rupees. So carrying amount of the cash generating unit net assets. So carrying value of CGU is given, which is 65 lakh rupees. Excluding any restructuring provision. So this 65 lakh does not include any restructuring provision, right? And it is talking about 31st March 2001. And remaining useful economic life of the recognized asset is 8 years. What is the useful life? 8-year life is also given. Management approved budget at 31st March 2001 include restructuring cost of 3,50,000 to be incurred in 2002. The restructuring is expected to generate cost savings of 1 lakh rupees per annum from 2003 onwards. Formal budgets have been prepared for 3 years to 31st March 2004. Right? A zero growth rate is assumed because market conditions are extremely competitive, and this is expected to continue for the foreseeable future. The future cash flow estimates are as follows: 1, 2, 2, 3, 3, 4, 4, 5, 5, 6, 6, 7, 7, 8, 8, 9. Okay. So this 8 years, cash flows are given. Okay. This 8-year cash flows are given, and the restructuring cost, it is written that management approved budget on 31st March 2001 include restructuring cost of 3,50,000. Right? So 31st March 2001 पे जो management का approved budget है उसमें restructuring cost 3,50,000 की आ रही है. And this asset was acquired. So basically the carrying value of cash generating unit was also given. Remaining useful life was 8 years, and 8-year cash flows are given without restructuring consideration and with restructuring consideration. This is given, right? And 2001, 2, 2, 3, 3, 4 cash flows are also given, right? You can see with restructuring, it is 520. Without restructuring, the cash flow is 870. This 3,50,000 is restructuring cost. For the remaining years, it is with restructuring, without restructuring. So with the remaining years, there is no restructuring kind of a thing. Okay. Because you can see the value is decreasing without restructuring consideration. I don't know why. Okay. In 2002, it is written the net cash flows without restructuring exceed the net cash flows with restructuring by the amount of the restructuring cost. Okay. So which is written here. The future cash flow, which exclude inflation, have been discounted at a rate of 4%. 4% discount rate is given. For simplicity, it has been assumed that the cash flow arises at the end of each year. Okay. Compute impairment loss as at 31st March 2001. What it is saying? What it is saying? What it is saying? It is asking to compute the impairment loss on 31st March 2001, right? When restructuring cost is recognized in the financial statement at 31st March 2001, when restructuring cost is not recognized in the financial statement as on 31st March 2001. What is your first impression after reading this question? What is your first impression? Anyone who want to attempt? Anyone who wants to attempt? This question is asking you the impairment assessment on 31st March 2001. This question has told you that the company's approved budget on 31st March 2001 has this 3,50,000 rupees of outflow in 2002, right? In 2002. So then the company has given you the cash flow for the next 8 years, 1, 2, 2, 3, 3, 4, so on and so forth up to 2009. And the company has given the restructuring, the amount, the cash flow with restructuring and without restructuring. The company has given the cash flows with and without restructuring. Okay. And the discount rate is also given. And the question is asking you to compute the impairment loss, assuming restructuring cost was recognized on 31st March 2001. Restructuring cost was not recognized on 31st March 2001. What is the relevance of this? Tell me. ये recognize हुआ नहीं हुआ, इसका relevance क्या है? Can I expect any response? Can I expect a response? Priyanka, Prashant, Anushi, Salesh.
Yes, sir.
Yeah. Yes, Priyanka. See, as I told you, the cash flows from restructuring has to be considered only when it is committed, right? And whenever it is committed, as per Ind AS 37, you need to take a provision in the books of accounts, right? Are you getting me? So let's say if on 31st March 2001, if it is committed, if it is communicated to the relevant stakeholders, then the provision has to be taken in the books of accounts. Provision, right? Whether provision means cash flow?
No.
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 So it means when the restructuring cost is recognized in the financial statement as on 31st March 2001, what does it mean? It means it is a committed cost, right? And hence the provision is taken and the outflow will happen in the next year, which is 1-2, which is 2002, right? If the restructuring cost is not recognized in the financial statement as on 31st March 2001, it means at the time of computation of impairment, this restructuring cost is not committed. Committed होता तो Ind AS 37 के हिसाब से प्रोविजन भी बनाना होता, राइट? क्लियर है या नहीं क्लियर है?
Yes, sir.
क्लियर है? It is not clear? I hope it is clear to everyone what I have explained right now.
Yes.
Okay. So now let's go to the solution. So we have the cash flow with restructuring consideration and without restructuring consideration, we have the cash flow. What we did? We applied the discount factor at the rate of which percent? At the rate of 4%. Okay. These are my discount rate at the rate of 4%. Okay. These are my with restructuring consideration, my cash flows are there. This is my present value. And this is without restructuring consideration, these are my cash flow. This is my present value. So my present value of future cash flows with restructuring is 65 lakh 14,000. Without restructuring is 62 lakh 73,000. Right? With restructuring, 65 lakh. Without restructuring, 62 lakh 73,000 is my present value of the cash flows. Right? The impairment calculation on 31st March 2001 differ according to whether or not provision for the restructuring cost is recognized in the financial statement. This will depend on whether the requirement of Ind AS 37 have been met for recognition. Are you getting me? So assuming provision for restructuring cost recognized at 31st March 2001. So now you have the present value, you have the value in use. What is the value in use with restructuring? 65 lakh 14,000. What is the value in use without restructuring?
6273.
What was the carrying value of this CGU? What was the carrying value of the CGU? 65 lakh.
65 lakhs excluding.
This 65 lakh is without restructuring provision. If restructuring provision will be there of 350, what is the value of this? What is the carrying value of the net assets?
61
minus 350. 65 minus 350. Carrying amount to provision भी कम होगा ना? So now, assuming if provision for restructuring cost is recognized as on 31st March 20x1, if provision has been made for restructuring cost, the costs are and benefit of the restructuring are taken into account in determining the cash generating unit's value in use. Right? Here the post restructuring value in use exceeds the cash generating unit carrying value, right? Which is 65 lakh minus provision of this. So what is my net carrying value of this net assets as on 31st March 20x1? 65 minus 3.5, 61 lakh 50,000. And what is my, with restructuring, what is my present value? 65 lakh 14,000. Is there any impairment? My recoverable value is more than my carrying value. Is there any impairment?
No.
Answer is no. There is no any impairment. Okay. So in this case, in the financial statement, only restructuring provision will come and there is no any impairment loss. But if the restructuring cost has not been recognized on 31st March 2001, then what will happen? It means restructuring cost is not committed. So you need to take the cash flow without restructuring consideration. What is the cash flow without restructuring consideration? 62 lakh 73,000. यही है ना? 6273 है ना? This is my cash flow without restructuring. Yeah. This is my cash flow.
Yes, sir.
And what is my carrying value? 65 lakh. So 65 lakh minus 6273. Impairment loss will come at 2 lakh 27,000. Is there any concern here? Any doubt here? Any question here?
No, sir.
So friends, we discussed this question also, and my dear friends, whenever there is an impairment loss has to be charged to the P&L. But impairment loss on the revalued asset, where revaluation surplus exists. So if revaluation surplus exists and then there is an impairment, you need to recoup, you need to charge off, you need to reverse your revaluation surplus to the extent it is available, right? So first you need to wipe off the entire revaluation surplus, and if there is an excess impairment, then it has to taken to the P&L. Okay, is that clear? Reversal of impairment loss. Whenever there is a reversal of impairment loss, if the company is opted for cost model and there is a revaluation of impairment loss, then that impairment loss can be reversed only to the extent of lower of recoverable value of the asset, and the carrying value, computed carrying value, had that asset never been impaired. The computed carrying value, okay, had that asset never been impaired. Right, friends? Is that clear? Clear, yeah, clear.
Clear in mind, sir.
Clear in mind? Very good. Now let me ask some multiple choice questions to understand that whether you have understood this or not. Just allow me a minute. I am opening my file. Yes. Please confirm if the file is visible, guys. Please confirm if it is visible.
Yes, visible, sir.
Actually, answer is also given. So let me unshare and remove the answers. Okay. Then only it is beneficial. Otherwise, you guys can just see. Yes. Now let me discuss these questions. And friends, are you aware that we have the class tomorrow also? Instead of class on Monday, I will be taking Ind AS 2 and Ind AS 41 tomorrow. Are you aware? The Monday class has been preponed to tomorrow, right? Saturday. Yes. Which of the following is not covered by Ind AS 36 impairment of assets? Guys, what is the right answer? Deferred tax asset, inventory, financial assets.
Option D.
Option D. Yes. Deferred tax asset is covered under Ind AS 12, inventory Ind AS 2, and financial assets. I told you there are two kinds of impairment, financial and non-financial, right? So this financial asset impairment is covered under Ind AS 109. So right answer is D, all of the above. Correct? Yes. Question number 2. Recoverable amount of an asset or cash generating unit is what? Higher of fair value less cost to sell and value in use, lower of NRV and cost, higher of fair value and value in use, higher of market value less cost to sell and value in use. What is the right answer?
Option.
Sorry? It's a very simple question.
Sir, A.
A. Okay. So what other students have responded? Mukesh told yes, it is A. Okay. Anyone who is thinking it's C? Anyone who is for C? No, it is A. Fair value less cost to sell, right? Fair value less cost to sell. A is the right answer. Question number 3. A smallest identifiable group of assets that generate cash inflow, which are largely independent of the cash inflow from other assets, or group of assets is known as what? Cash generating unit, branch, department, operating segment.
A.
A.
A
Cash
option.
generating.
CGU.
A. ऑप्शन ए. सबका ऑप्शन वैसे ए नहीं होता, इन दो क्वेश्चन में ऑप्शन ए था, राइट? लेट्स गो टू क्वेश्चन नंबर 4. Which of the following is required to be tested for impairment annually, irrespective of the presence of indication of impairment or not?
All of the above. D.
In 3 intangible assets, I told you these are the exception. Intangible asset with indefinite useful life, and I have also explained during Ind AS 38 as well, that intangible asset with indefinite useful life are subject to impairment. It cannot be amortized. Intangible asset not yet available for use, which is intangible asset could be under development as well, right? Goodwill acquired in business combination, and today we have discussed that the goodwill, if it is part of CGU and if it is impaired, this goodwill cannot be reversed in future. Okay, so all of the above is the right answer. Then question number 5. Which of the following is not an internal indicator of impairment? Economic performance of the asset is worse than expected. Physical damage of the asset. Decline in market value. Asset is part of a plan to discontinue or restructure the operation.
First one, economic performance. External
Sorry?
factor. A option, because this will be an external indicator.
A is the external indicator.
C. Decline in market value.
Sorry.
See, internal indicator are those indicators which are arising within the organization. Economic performance of the asset is worse than expected. You expect X, you got Y. Okay. When you're using the asset, physical damage of the asset, you can evaluate that your asset is physical damaged. Decline in market value, there is no control of the company on the market value, right? So government has come up with a negative announcement and the market value of the asset has gone down. The classic example is diesel car, right? Fourth, asset is part of a plan to discontinue or restructure the operation. Okay. So this is again discontinuation, restructuring. It is within the management, right? So C is the right answer, decline in market value. Question number 6. Dash is considered as recoverable amount when it is not possible to measure the fair value less cost to disposal for an asset. Market value, replacement value, value in use, carrying amount. We discussed this today.
C. Value in use.
Value in use, right. Question number 7. In measuring the value in use, cash flow projections, the cash flow projections should be based on the budgets or forecast covering a maximum period of dash years unless a longer period can be justified. I took an example of airline company, aircraft.
5 years.
Yes. So you have to take a forecast of 5 years until and unless the longer forecast can be justified. Question number 8. In case of estimation of cash flows for calculating value in use, future cash flows are estimated in the currency in which they will be generated and then discounted using a discount rate appropriate for that currency. An entity translates the present value using the dash at the date of value in use calculations. So let me revise this concept. Okay, I haven't covered this concept today because this was not part of the question. So let me revise this. So you are an entity. Your asset is lying in USA. You are an Indian company. Okay, your asset is in USA, for example, building. Okay, now you have to do the impairment testing of that asset, of that building which is in America. So standard says that whenever you are computing the impairment for the foreign currency asset, okay, so for the foreign currency cash flow, first you need to compute the cash flows in the foreign currency which that asset is fetching. So for example, this asset, you have the 5-year forecast, and every year this asset will give a cash flow of $100 every year. Okay, so 100, 100, 100, 100, 100. So $100 is the foreign currency amount. Then standard says that you have to apply the discount rate prevalent in that currency, not in INR. Why? In India, the market interest rate, the interest rate are higher than the USA. US में इंटरेस्ट रेट कितना होगा 3% 4% होगा इंडिया में कितना होगा 9% 10% होगा so the discount rate prevalent in that currency that country you need to apply the discount rate so you have 5-year cash flow in the foreign currency apply the discount rate let's say it is 5% for example so applying the discount rate you will get a value in use in the foreign currency जैसे INR का वैल्यू इन यूज निकाला आपने वैसे US डॉलर का वैल्यू इन यूज निकल गया सो वंस यू गॉट द वैल्यू इन यूज ऑन अ पर्टिकुलर डेट अप्लाई द स्पॉट रेट to that present value of the foreign currency outflow apply the spot rate multiply by the foreign currency value in use will give you the value in use in Indian currency right so this question is asking the same aspect in case of estimation of cash flow for calculating value in use future cash flows are estimated in the currency in which they will be generated and then discounted using a discount rate appropriate for that currency. An entity translates the present value using the dash at the date of the value in use calculation. Which is the right answer?
B.
Spot rate. Spot rate is the right answer because today you are computing the value in use, which is present value of future cash flows. Okay. Question number 9. When an impairment loss occurs, the carrying amount of the asset should be reduced to its dash. फेयर वैल्यू, रिकवरेबल वैल्यू, फेयर वैल्यू लेस कॉस्ट टू सेल, वैल्यू इन यूज। आप कैरिंग वैल्यू को कहां तक रिड्यूस करते हो जब इंपेयरमेंट लॉस होता है तो?
Recoverable amount.
Recoverable amount. Your impairment loss is equal to carrying value minus recoverable value. Carrying value minus recoverable value. Okay. Question number 9. Question number 9. Sorry, question number 10. Not 9. Question number 10. When a CGU has an impairment loss, the loss must be first applied to asset with obvious impairment, goodwill, other asset of CGU on a pro rata basis based on management discretion.
Goodwill.
Goodwill, right? There is no goodwill. अगर what is impairment? Impairment means नाम खराब होना. आपका नाम ही खराब हो गया, then there is no goodwill at all, right? So first the hit has to given to the goodwill, right? Goodwill has to completely wiped off to the extent it is an impairment loss. Okay, so yes, goodwill, B is the right answer. Goodwill is the first item. Thank you so much, friends. So we have also covered 10 multiple choice question along with the question given by Board of Studies. Now Shilpa ma'am is there. So ma'am, would you like to make any announcement?
Thank you, sir.
Over to you.
Thank you, sir. Students, as we discussed yesterday also and day before yesterday, those students who were there in that GST class or those students who were in this AFM class, we still have 1 day where you can fill that feedback form on IPA strategy priorities. So we request you all, the mail has been sent, or otherwise we have also shared a document on WhatsApp group. So those who can provide the feedback, it is requested, because you all are going to mark your presence on international platform. This is an opportunity given to you from Board of Studies, and one must avail this. So I request all of you just to fill that feedback form. Okay, that is there on the WhatsApp, and you have to mail back after filling that feedback form. You have to mail back to bos@icai.in. Okay, or you can directly mail to me also at shilpa@icai.in. Today is the last day. So I request all of you, those who have not gone through that form, those who have not gone through the document and fill the feedback form, please do that by today. Okay. And students, I also request all of you that LVRC feedback form. Though many students have started filling that feedback form, we are getting good response, but still we request session wise feedback we require from all of you, so that we can understand for which topic you find the faculty to be good and what all your expectations are. Okay, so we'll be further working on that and we'll try to cater you all your requirements. Okay, so rest any queries you have from Board of Studies, you can tell me. Students,
Shilpa, actually, I'm not able to join WhatsApp group.
you're not able to join
Can
the WhatsApp
anyone,
group.
yeah, so can anyone ping that link to on my WhatsApp number so that I can directly join from there?
Your number, just a minute. Just share your number. Just a minute, huh? Just a minute. I think you don't have that login problem, na? That the key you have not lucky. Only on the basis of invite you can join. Is it like that?
Actually, you have that day, sir, pasted a link on this chat. So I
Mm-hmm.
copied that in my mobile, but it was saying like no proper link or group you can join.
Okay. We are again sending you the link. Otherwise, you do one thing. You just share your number on the chat box. Your mobile number on the chat box. We'll try to add you. Otherwise, we are also once again we are sharing the link with you.
Okay. Thank you.
Just a minute. Uh, you have shared your number. Okay, this is Praveen Gupta. We have shared that link again to everybody on the chat box, and we got your number. Uh, we'll try to add you. Any other query, students? Any other problem you are facing? Anything? Okay, then students, we'll wind up the session. Sir, we can wind up the session now.
Thank you, ma'am. Thank you, students. Have a good day. Bye-bye. Take care.
Bye, students. Bye. Yes, yes.